Hello, everyone. I have Liz, the mortgage originator here, and I'm going to ask her a few questions because we just had a meeting in the office today, and I thought there were some really cool topics to talk about for self-employed buyers in today's market. So the very first question I wanted to ask you today is going to be, what are some of the forms that self-employed buyers should have handy or prepare before trying to get into the home buying process?
Hi, Brandon. We have to have 2 years tax returns.
Okay.
So the most recent 2 years filed personal tax returns.
Okay, perfect. Thank you so much. And then another thing that we talked about was, so you talked about a conventional loan. You probably need to be working in the business for 5 years to get like 1 year tax returns on a large down payment. Do you remember talking about that? Can you expand on that point a little bit more?
Yes, absolutely. So when you're doing a VA loan or an FHA loan, then you have to automatically have 2 years self-employment and 2 years tax returns.
Okay.
When you're a conventional buyer, as long as you've had your business license for a minimum of 5 years, and we run it through the automated system, usually with about a 10% down payment or more, you can receive the eligibility to use 1 year tax returns. And that can save a lot.
Yeah, not having to worry about 2 years because as we were all going talking in the meeting, we were talking about how 1 year you may have a lot of money coming in, the next year you may not have a lot of money coming in, especially in the nature of real estate. Like, we don't really know what the market is the market. So
that is correct.
I can see how that, so it really just helps that really just have time in the business when trying to buy a house as a real estate agent or any other type of self-employed business.
Yes, and when you know a buyer that's thinking about purchasing, it's always good to have me look at the tax returns ahead of time, because especially if it's before filing, we can make some adjustments that may help benefit him to qualify, more before actually filing the taxes. It's always good to take a look.
Okay, perfect. Well, thank you so much for that. And then my next question was going to be like, you talked about FHA or VA loan that equals like a stream loan. What?
So that is in regards to a refinance.
Okay, yes.
So when you want to refinance and let's say you had a bad year and you're self-employed, as long as you have currently have an FHA or a VA loan, then to do a refinance on those, you actually can do a streamline refinance, which means you do not have to requalify. You have no income documentation, no appraisal. You actually just can streamline the rate down lower.
Wow, how does that process work? I'm trying to like picture that in my mind, because how would that process work? Just doing it without
it's based on your credit. So you still have to have good credit, and you cannot have any mortgage lates.
Okay.
And
mortgage lights?
Lates.
Okay, got you.
Yep.
Okay.
And then you can just go as long as you've been in the property at least 6 months.
6 months at least.
So everybody who bought last year at the higher rate or the beginning of this year, 6 months from now, when the rates come down again, and if they did an FHA or VA, then you can streamline that interest rate.
That's really good information, you guys. Hold on, I'm going to put stars all over the screen. Hold on, that was really good. I want to say thank you for that. And then you were saying for conventional loans, you can refi anytime. Since you're conventional?
Yes, you can refi any of them anytime, but to do the streamline, you have to at least be 6 months worth of payments on your new loan.
For all conventional VA?
Yes.
Okay, got you.
Conventional, you just need to, you have to requalify though.
Just requalify.
You have to.
Okay, and then of course your credit, everything has
to be good, and your income has to be good, and you have to have an appraisal in most cases.
And then I can see how there's pieces to the puzzle for all these things, just to get a lower rate.
So much, yes.
Okay.
That's why you ask me, because everything. There's so many variables when it comes to loans, and there's so many different types of things that could fit and may not fit.
Right. And then can you also tell us about, I know there's something going on where there people with good credit are now, can you explain the topic of the credit situation we're going through? I know a lot of people are talking about it. Yeah.
So Fannie Mae, Freddie Mac, that's the governing entities for conventional financing. They have what's called loan level price adjustments. And as of May 1st, they decided that they were going to switch the loan level price adjustments around to help the lower credit score borrowers, which normally had a really high price adjustment against them, which made their interest rates super high. They're trying to lower their rates down a little bit to bring them back into the marketplace. But by doing this, somebody had to pay for it. So they're increasing the price adjustments in the higher credit score borrowers. So the higher credit score borrowers that are currently buying are going to get, on a $400,000 loan, maybe $40 more a month. Their payment's going to be to help subsidize the lower price adjustments for the lower credit score borrowers. Now, they're not going to get a worse rate than the worst credit borrowers. Right. They're just trying to give the lower credit scores
a chance
to get in the marketplace. But again, most of those lower credit borrowers are not doing a conventional loan anyways. They're doing an FHA loan, which does not have those price adjustments. They just have.
So what's going, like, I'm trying to wrap my mind around this. So like, if you have a conventional loan, you now will be paying a little bit more,
a tiny bit more
to then help just those at a lower credit score. So, and they're typically not getting conventional; they're only getting an FHA.
Yeah, I mean, some do, because if some might have a 20% down payment.
That helps.
And if they then they would want to do conventional, because FHA has mortgage insurance regardless of your down payment.
Oh, and then conventional doesn't have that.
With 20% down, there would be no mortgage insurance.
So then there's the difference. It really...
It just really doesn't...
It's an iffy... It's kind of like... It doesn't really help.
It's not really making a lot of sense to us in the mortgage business.
Okay.
But Fannie Mae seems to think it's making sense.
So. Okay, yeah. It's like, we'll see where this ends up going. I mean, has there been things like this that have happened I'm sure throughout the history,
always loan level price adjustments.
Something happening in the market.
There's always something. They're always trying to try new things, maybe to stimulate, or maybe not.
Okay.
Sometimes they backfire.
Okay. It's like a test. It's kind of just to figure out, because all these things going on with the interest rates, they're just trying to. And do you know any information? Can you, from just I know the Federal Reserve recently met. Were you able to watch in or hear in or learn any nuggets of information?
No, I did not the one just this week. Okay. I was not able to listen to that one. Okay. But so when the Feds meet, they're talking about the bank rate.
Right.
So, and sometimes that affects the mortgage rates adversely, and sometimes it affects the mortgage rates positively.
Right.
All right. So this week we've actually seen mortgage rates drop.
Okay, nice.
Okay.
Yeah.
So
that's really good information. Hey, call me.
I mean, they're not 2%, but they're getting closer to 5 again instead of.
That's nice to know, because a lot of the people I'm talking on the phone, they're just like, don't call me until. Or they don't say don't call me, but like, I don't really want to hear anything until those rates sound nice, because there are a good amount of people who want to buy. Like, there are a plethora of them, but it's like it's that rate that's kind of getting them. But then I'm like, you look at the history of rates, and I'm like, at one point, didn't we have like a 21%? Like, this is kind of normal. Would you say it's normal? Like,
yes,
it's just people are used to that too.
We have such a low inventory. They need to get into the market, especially now, because they can refinance. If they wait till those rates are low, everybody is waiting for those rates to be low, and they're going to all start buying again. And then those 500 houses we have on the market are all going to have 500 offers on it. And then what's going to happen? Those rates are going to
shoot back up.
Sales prices are going to shoot way high, and you're not going to have. You're paying more for the same house. The payment's going to be the same if you got in now.
So what you're saying?
Overpaying. Buy now, refinance later.
Okay, you guys heard it here first. So let's do it. Give me a call. I'm serious. This is the time. Again, with the inventory being the way where it is, where we only have 2 months of inventory. Like, we can run out that quickly. So if rates start dipping into the 4, of course everybody's going to start to know that.
And there's going to be multiple offers.
Okay.
And you're going to be paying over. I mean, it could be 40,000, 50,000. I'm already seeing a couple.
Yeah, already right now.
I have right now that wanted a house, and they actually bid $36,000 over.
Whoa! It's in today's market. It's still
market.
happening.
Okay, but she was thrilled to death. She's getting, a 5.75 rate, and she's in her house and she's going to refinance.
And she knows that
rates
she
come
can
down.
refinance.
Absolutely.
Yeah, that's the best thing to do. Again, I mean, and it's not where they were back in October last year, that 7. That was like something else.
They're already coming down.
Okay, well, that's really good news, and that answers all my questions today. So I want to say thank you so much, and we'll see you guys on the next one. Bye-bye.
Bye.